Hi, this is Zak Mir, editor of Spreadbet magazine, with a look at some of the precious metals for March the 17th, 2014, St. Patrick's Day. And I'm starting off with gold, where you can see there's been a decent progression here since the bear trap below $1,200 at the end of December, a break back above the grey 20-day moving average, then the 50-day shown in blue, and then finally for February, the key event really as far as the near-term price action, which was the break above the 200-day moving average, which is currently at the $1,297 level. The progression overall since December within a relatively narrow trend channel. We were looking for a $1,380 target, which has been achieved relatively easily. I say easily on the basis that there's been no requirement for a retest of the 200-day moving average. And as you can see, most of the price action has been at or above the green 10-day moving average, now at $1,354. Intraday dips towards the 10-day line were the opportunity to go long for February and early March. And since then, we've seen an acceleration, obviously, on the basis of the geopolitical situation in Russia and the Crimea. Possibility of a mid-move bull flag consolidation towards $1,350, and then the second leg here coming up to maybe deliver another $100 or so on the upside. Likelihood is that we've got a wide December price channel now up to $1,470, and that will be the new target here, while there's no breakback below initial March support at $1,350. So really in the near term, you'd be looking towards any dips towards 1350 or the 10-day moving average 1354 as a buy opportunity, given that the RSI now is in the overbought territory at 72. But of course, as we know, on the biggest moves in stocks and markets, the RSI becomes secondary to the positive momentum in force, and really we can be overbought for an extended period before any significant breakdown may be seen in the near term. Moving on to silver, and we've got this precious metal in a rather more sedate type of price action. Consolidation here, as you might have expected with gold, in the sense that there was the breakthrough the 200-day moving average at $20.88, but then the double test we've had at the 200-day line and then just below it in March. That should be a positive consolidation, a bull flag ahead of a new leg to the upside. And we would expect silver to play catch up with gold over the near term. It also helps that you've got an extended RSI uptrend line here at the 50 level, the neutral 50 level, the current level for the RSI 56, which is a very viable zone. You'd be going long now towards the 200-day line with a stop loss, say, below the 50-day moving average of $20.54, and targeting as high as the top of last year's price channel at $24, possibly a bit more over the next month or two. So for those who missed gold, it looks like there's an opportunity to go long of silver as a sort of compensation on that trade. Finally, to finish off with platinum, where it's a similar situation with silver. Once again, here we haven't had that sort of geopolitical component. We've just had a sort of a natural, let's just say, a natural improvement here over the near term. Wide rising trend channel from the middle of last year, from June, with a target towards $1,600. Really, you'd expect that to be hit once the current bull flag consolidation around $1,470 is complete. Stop loss in the near term, $1,453 at the 20-day moving average. Interestingly, also, we've got a golden cross buy signal between the blue 50-day and black 200-day moving averages to back the buy argument. And really, if you're not if you're not so keen on silver, but perhaps platinum makes for an alternative selection here, given that we can see probably more rapid upside here than at in its counterpart market. So platinum, an alternative to silver, sort of midway between the technical position of gold and silver over the near term. That's it for me. See you again next time.